Welcome to Unstoppable, where dreams turn into plans and plans turn into powerful action. Hosted by Paula Swain, financial planner, business owner, grandma, and queen of reinvention. This show is for women ready to stop surviving and start thriving. We'll laugh, we'll learn, and we'll tackle the messy, beautiful, in-between parts of life that no one really talks about, but we all live through. This is Unstoppable.
Hi, and welcome to Unstoppable. I'm Paula Swain, your host and financial planner with the Financial Center for Women. So today we're going to talk about something that's very difficult for most people to discuss with their family members or even to face on their own. It's long-term care. Nobody ever wants to be in a long-term care situation, but it's likely to happen to the majority of us. So I've asked my friend, April Markland, who is, basically a wholesaler for me, who helps me out when I need to get information on long-term care, and she works with CIP Insurance. So welcome, April.
Thank you for having me, Paula. I'm happy to be here.
You're welcome. So it's a tough conversation to have, long-term care.
Very much so.
Nobody wants to talk about it.
Nope. I am in the business and I don't want to talk about it. I have had the hard conversations, but it is very difficult to have with your aging parents in particular, and for a husband and wife to have with one another.
So I know I have that conversation with everybody. I do my due diligence and make sure that they understand, what that looks like for their financial plan. And sometimes it's, people can self-insure. Sometimes they can't. Sometimes they can purchase a policy. Sometimes they can't. But we always do look at that. But even with having that conversation, people are like, no, I'm not doing that. It's so expensive. I don't want to do the coverage. And if they don't do anything and they spend down all their assets, what's going to happen if you have no money?
If you have no money, that's when Medicaid takes over, not Medicare, Medicaid, and you are stuck going to a medicated facility. So your choices are very limited at that time, and it's very difficult when you're relying on Medicaid to be able to have the retirement and the future that you foresee. Those facilities are not the best.
Right, and if you're married?
If you're married,
that's a worse situation.
That's the worst situation because you have to spend down and your spouse can keep the house and that's about it.
Yeah, I think they get to keep something, but it's not much.
It's not much.
So you're changing their lifestyle and yours.
And yours, yes. And then they're stuck when you pass and then they follow you into the home. Right. Then they're stuck in the same
Or
boat.
even if you don't pass, what if you're just, eventually, we all do, right? Silly.
Sure.
If you're in a dementia or Alzheimer's situation and you could be in care for years.
Yes, because a lot of people with dementia or Alzheimer's are physically okay, and it's just the mental incapacity, and they can be there for, 8, 10, 12 years. Who knows?
Do you find that you're finding more insurances put on women than men?
Yes, women, I would say it's much more important for women because we live longer. And oftentimes we take care of the men. So that's just how it goes. It's not always, but a lot of times we do. So the men get sick or get ill, we're taking care of them at home as long as we possibly can. And once they go in the facility, they may not be there as long, but then we're left to take care of ourselves. And if we have no one in the home to take care of us, then we're going to a facility faster. And that will deplete any kind of savings that you have very quickly.
I was at a conference one time, and there was this long-term care expert speaking, and he kind of put it this way. He said, women should have insurance because of the reason that we'll likely take care of our spouses. And it's more difficult, not that he can't take care of us, but it's more difficult for the male to take care of the female because they're always have thought of themselves as the protector, the provider. And when they see their spouse sometimes helpless and needing that care, it's very, very difficult for them to be able to handle that.
Absolutely, I agree with that. And that is just, we like to think it's an old gender role, but it's still not. It's still ingrained in men and women. Women tend to be the caregivers and men tend to be the providers. So it is very difficult, even though your spouse may want to take care of you. He may not know the best way.
And also, as caregivers, lots of times you could be so overwhelmed with the care. You could be, it consumes you, it overwhelms you, and it also makes you sick.
Mm-hmm.
And then you end up, I'm not saying you're going to end up in needing a nursing home type of situation, but you could end up, a lot of them pass away before the person that they're taking away.
Or also needing care. It can be very stressful. And the older we get, the more stress affects us. And I'm seeing that with my parents right now. They're both in their 80s, and my dad is starting to lose a little bit of memory. And my mom is taking care of him, and it is very, very stressful for her. And I worry about her sometimes as to, she has help, but as to her own health, taking care of him, it affects her very much.
Right. I have an aunt and uncle he has dementia, and she finally had to bring someone in to help because no insurance. They're self-funding, but she couldn't do it anymore. Like he would go, I think the term she used was manic, and where he didn't sleep for hours or days, mm-hmm. right? And so she had to stay up. So she was, she wasn't ill, but you could see that it
takes a toll
on her. Yeah,
absolutely.
So she had to start bringing in care.
Yeah.
Yeah, and I want to go back to one thing that about the whole Medicaid situation. You don't get to pick where your home is. So, like, we're in Southeast Michigan.
Mm-hmm.
Likely, you would get something in Southeast Michigan, but it would be
and there may be a couple
that
you
could be an hour or two away.
Could be an hour or two away. You have to find the one that accepts Medicaid, and there are a few. And maybe one slightly better than the next, but your choices are just very, very limited.
And so you're giving control basically to the government.
Yes.
To take care of you.
Absolutely.
And don't we all love to let the government take control of our lives?
Which is why we want to have these conversations sooner, right? To know what our plan is. And a lot of people think of long-term care as I'm going into a home, and that's not what it is. Mm-mm. A lot of people these days are staying at home longer because they have, whether it's licensed or unlicensed caregivers coming in, the spouses are getting helped to take care of the other one that needs help. Or if you're single, people are coming to your home, but you can stay in your home much longer. And a lot of us want to do that. We want to be comfortable. We want to be at home. We don't want to be in a facility. The facility is the last resort. There's also assisted living facilities. They're kind of in the middle. And I think it's really important to have a plan of what means the most to you. In my heart of hearts, where do I want to be?
Let's talk about the definition of long-term care when it comes to insurance purposes. Sure. I know there's 6 activities of daily living.
Yep.
Plus 2 other which are cognitive, right?
Severe cognitive impairment.
Okay, so what are the 6?
ADLs. We call them ADLs, activities of daily living. It's dressing, eating, bathing, toileting, transferring, and continence. So toileting means you're actually getting up and down from the toilet and can go by yourself. Continence, obviously, you've lost your ability to, choose when you go. So there's the difference between those two. And to qualify for an insurance policy, you have to be unable to do 2 of the 6 ADLs.
Which could happen. I mean, if you think about it, it could be you have a stroke and you're
dressing. You can't do your buttons on your blouse, right? You need help getting dressed or a zipper on your pants. It can be transferring.
Getting in and out of bed.
You can't get in and out of bed. Exactly. You need, one of those adjustable beds to help you. Long-term care can cover the cost of those things in home modifications. Or now you're in a wheelchair or you're using a walker instead of being able to get around freely. You can use long-term care insurance to get ramps built into your house to make that staying at home so much more comfortable.
Right.
But yes, it's very easy to do. Young people could be unable to do 2 of 6 ADLs if you were in a car accident, something like that.
Yeah, but can you get long-term care coverage on?
You can't, and when I say young, I don't mean 20s.
But it can happen in your 20s.
It can happen in your 20s, but most of us obviously are not thinking long-term care until we're much, much older. And when I say young for long-term care purposes, I'm thinking 50s is definitely a time to start looking for it. because the cost, as you pointed out before, the cost can be prohibitive when you start looking in your 60s to 70s. And that's why a lot of people can't afford it. It also, not just the cost, but you have to go through some underwriting. So by the time you think, oh, well, I should really look at this, you can't qualify for it. So I do think...
I know that's when you get the call, Paula, my mom is going through something and, we need help. Can we get her some coverage? No.
No, I'm sorry. It's right.
Yeah,
it's
it's
unfortunately too late. Insurance companies, once you already need the care, are not going to give it.
It's kind of like my house just burned down. Let me call and get some homeowners insurance to cover that. And it doesn't work that way.
Exactly. So if you can start to think about it in your 50s, it would really, really be helpful to you in the future.
What's the youngest age?
40.
40? Okay.
40 is the youngest age that you could get a long-term care policy.
Which isn't a bad idea.
It's not a bad idea. I will say in the real world, at 40, we're still thinking about our kids, and our spouses and our incomes and our saving, our retirement. It's a great idea if you can stack on long-term care too, but I will say it's a lot, right? It's a lot to think of in your 40s. So if you can get there by 50, you're ahead of the game.
Yeah. I haven't purchased any yet, and I know I'm in my 60s, but it's on my mind.
It's definitely. I will be 48 at the end of this month, and it is now on my mind. And as I said, I see these policies every day. I probably should have looked at 45, but I still feel that
I should have looked at 45 too, but I didn't.
But I still feel like I'm ahead of the game if I get there by 50.
Yeah, I know. We were working with clients of mine that I think they're in late 60s, and then by chance I met with a woman who's 73, and we just did some quotes for her to look at getting coverage. And to be honest, we kind of looked at it. And we're both like, maybe not. I mean, I'm not so sure she won't, even though she's 73.
Right. And I'm not saying that's impossible. It just it tips the scales a little bit more if you're doing it earlier.
Okay. Traditionally there was only one type of policy.
Yes.
And that was basically I look at it like homeowners insurance. Either you use it or you lose it. So, and at some point they could re-rate it and raise your premium, and it still happens. Those traditional policies are still out there, but they're now available, what we call hybrid.
Yes.
So we do have the traditional policies available, which you would purchase basically a daily benefit.
Yes.
And then for a certain period of time.
Right. So those policies we call traditional long-term care. There aren't many carriers that still sell them, but you do pick a daily benefit and a number of years that daily benefit will pay. There's an elimination period. Obviously, your term, use it or lose it. If you never need long-term care, all of that's gone. But the big deal with those, and the reason that people aren't too excited with them anymore, is they can increase in premium. And they have. All of them have, across the board. Every carrier that sells those policies have increased in force policyholder rates. And it's very frustrating to get that in the mail. And sometimes you get it more than once. So when your premiums increase 30, 40, 50%, that's why those went out of favor. And now the hybrid, what we call hybrid long-term care policies, have a life insurance benefit and a long-term care insurance benefit. So if you never need long-term care, there is a life insurance benefit paid to your heirs.
Yeah, there's a couple different versions of that. One is basically the life insurance, depending on age, of course, is about the amount that you put into it.
Correct.
It doesn't grow like an investment. It doesn't grow. But the long-term care benefit will grow as you get older if you put a cost of living on
the
it.
leverage is for meant
benefit.
for long-term care more so than life insurance. Yes.
Right. But there is a component of life insurance that has the long-term care
rider
on it.
Yes.
So depending on what the purpose is. So for some clients, we look at if they need care, that the long-term care rider on the life insurance will cover that, but it's also, they have a death benefit larger that could offset some cost for them down the road.
Correct.
So there's two different types of policies.
Correct. So if I may.
Go ahead, explain away.
The life.
I don't think I'm doing a very good job of it.
No, you're doing great. The life insurance with the long-term care rider is if you have life insurance need first and long-term care is a secondary thought. It gives you something that you have in place for long-term care, but really what you want is your heirs to get that death benefit. And what that allows is a percentage of the death benefit. If you needed the long-term care, it's usually 2%, but it can be 2% or 4% of the death benefit that you can access early for long-term care.
Okay, so let's put some numbers to that. So if it's a $250,000 death benefit, 2% of that would be
$5,000.
$5,000 a month until you use the $250,000.
Correct, dollar for dollar,
And then
until you use it. So if you use half and then pass away, the other half goes to your beneficiary.
So it's what is it? A little less than 5 years, correct?
Correct. It's 48 months. Yep.
Yeah, 5.
Yep.
Yeah. So, well, that is a lot less than 5.
No, I'm sorry, 50 months.
Okay.
That's what I meant.
So that's a perk
Correct.
of having that type
Of having
of
that.
a
But someone who's buying that is usually thinking, I probably don't need it. I want it just in case. The other policy that's the hybrid, it's basically the life insurance death benefit is what the premiums you've paid into it. So it's not really a big life insurance amount. But the long-term care is what's leveraged in those policies. And that is somebody who's thinking, I really want coverage for long-term care. And then great, if I don't use it, I have this death benefit. So your focus is long-term care with those policies. What I will say just real quick about both of those can be guaranteed. So to just backtrack a little bit, the standalone policies weren't guaranteed premiums. Both of the policies we're talking about now, you know what you're going to get and you know what you're going to pay for it.
And some of those can be paid in a lump sum. Some can be paid in a 5-pay, 10-pay, 20-pay, or for the rest of your life.
Yes.
So you have a lot of options.
You have a lot of options.
The lump sum is typically what I see most people end up doing, although I kind of like spreading it out, making it a little bit more affordable.
Yes. Well, and it depends where the money's coming from, too. Mm-hmm. If you're taking from your IRA, you don't want to do a one-time lump sum.
Not want to do a lump sum out of an IRA.
Right.
That's a big no-no. That's a tax problem.
Correct.
Yes,
so
please do not do that.
Right. There's also joint plans available for spouses. So if the concern is, what if one of us needs it, one of us don't, we can share a plan.
And you know what always bothered me is that there's discounts on some policies for being married, which is just so unfair.
It is, but as I said before, because one spouse often takes care of the other, and usually it's the woman taking care of the man, doesn't have to be, that's why they give the discount, because the insurance company is assuming that you're not going to go on claim either as fast or at all.
Oh, I guess
for one of the two.
Well, I wonder, should you go on claim? I don't know.
Actually, yes. I would suggest if you buy one of these policies and you're still staying at home, there are two different types of policies. One is called a reimbursement plan.
Wow, you almost knew right where I was going. You knew exactly where I was going.
And one is called an indemnity plan. Reimbursement plan, you actually have to pay out of pocket first and then show the insurance company that you use that money for qualified.
I call it the receipt.
Yes.
The receipt
for
plan.
Qualified. And when we say qualified long-term care expenses, that means the insurance company has to approve them. And if you're in that type of plan, many of them don't approve informal care. And what I mean by informal care is if you do have a friend, a relative, a neighbor taking care of you, you can't go on claim. Indemnity style is once you qualify, they're paying you in cash. You're getting that monthly benefit every month, and you can use it on whatever you want. So you could pay.
Well, you know me, I'm like, no reimbursement plan.
Yep.
No
I favor indemnity too. That way it gives you flexibility. You could have a family member, and as we talked about earlier, that family member that may have to quit their job to take care of you, now you have the funds to pay them and give them an income.
How I also look at it this way, if, let's say you have a $5,000 a month benefit, and you only really need $3,000 of that, you can take that $2,000 and do whatever you want it with it, but you can bank it. So it could be something like you have a 6-year benefit period, or less, maybe it's only a 4-year, but yet you can extend out those funds down the road by taking them and saving them, especially if you're like in a dementia or Alzheimer's
Correct.
situation.
You're spot on there, because once you turn it on, in the indemnity plan and you keep getting those checks, maybe when you turn it on, you're only having someone come in 3 days a week. You don't need that much help yet. So you could bank half of it. Who knows? You bank as much as possible. And if you have a 6-year...
Or you could take a trip. No,
you could. Well,
let's be smart about that decision.
I often say, the spouse that's taking care of the other spouse might need a little vacation, might need a break, might want to hire somebody to come in for a little bit. You can use it for whatever you want.
Yeah, it's important to, one, for the caregiver to take care of themselves. Mm-hmm. So important.
Yes. That's why those indemnity plans are wonderful.
Okay, so let's talk about how, like, if you're going to look at a policy, really when I'm working with my clients is we just really start at $3,000 a month. And no, $3,000 a month is not going to cover a nursing home situation. But it'll provide you with some coverage where you can, if you're single, you'll add in your Social Security, some of your own investments or a pension. It's a starting point.
Yes.
And the reason I start with that is really because of the cost. And if we're purchasing young enough, and that we're buying $3,000 a month, then we add on a cost of...
yes, an inflation rider.
Inflation rider. Mm-hmm. By the time you typically need it, maybe in your 80s, so you have from your 50s to your 80s for that to grow, and then you have a really nice benefit when you get out there. Because we have no idea, if you're 50 now, what the cost is going to look like when you're 85.
Correct. All we can do is balance. It doesn't have to be the insurance policy covers everything. We don't necessarily need that to. Some people might. Some people might say, 3,000 is enough or whatever they're feeling. But we want to make sure something's there so that you have choices when the time comes. And none of us know when that time's going to be. And the best thing I can say about long-term care is it gives you choices.
What does the average nursing home cost right now?
About $5,000 to $5,500 in Metro Detroit.
Okay, so if you do $5,500, let's just do 5, make it math easy. You have $3,000 in coverage. Then out of pocket, it's only $2,000, which likely could be your Social
Security. Right.
So you're
all
covered.
set. Mm-hmm.
What's the average assisted living facility?
Assisted living is cheaper than the nursing home. So I would say, actually, I misunderstood when you first said that. I would say 5,000 assisted living. I would say nursing home, we're closer to 8.
Okay, so we'll correct that. 5,000 assisted living,
8,000. Yeah. Yes.
So, well, you're still close.
You're still close. And again,
closer.
Right.
Closer.
Depends how much time we've had to build that in.
So I've had clients that have actually paid for 24-hour care for like a home health aide come in for 24 hours.
Yes. And that would be very expensive.
Yeah, like $12,000 a month.
Mm-hmm. I can imagine.
Yeah, that's very expensive.
Very expensive. Very expensive. But that's why it's important to talk about what are your goals? It's almost more important to say, what are your goals when this happens? Because more than likely, it's going to happen to most of us. Some of us, most men like to say, oh, no, I'm just going to die, right?
Or Kevorkian.
If
you know what Kevorkian is.
Yes. But to most of us, it's going to happen. At some point, we're going to need some care. We're going to need some help.
And it doesn't mean for the rest of your life.
No.
It could mean for 3 months. Because when we look at Medicare, if you're of that age, Medicare only covers, it doesn't
Skilled
cover...
nursing facility for 100 days, maximum 100 days.
So what are you going to do after that?
Right. So it's nice to have something in place, and it's nice to have a plan, and it's nice for people around you, whomever that may be, whether it's your children or your friends or your neighbors or whoever your group is, for people to know what you're looking for, because you might not be in a position at some point to give them all the direction they may need.
So, April, are you saying we should communicate?
Right?
We should have a conversation with our kids?
We really
should.
Our parents? Or our parents, yes.
About what that looks like?
Communication
and not just
is key.
Assume
that
it's going to be taken care of?
Yes, and that's what a lot of people do, is just think, it'll be fine, or it won't happen to me, which is human nature with anything.
Yeah, I was talking to a potential client for me, and she was telling me about her sister. And her sister had, I can't remember what happened to her. Both of her legs are amputated. And so she then fell out of bed and her spouse died. She fell out of bed. Like it's just like a cluster of things happened to this woman. And so she asked me, she goes, what are her options? And I'm like, I would talk about going to an elder care attorney. The problem is she's not nursing home ready. She's assisted living ready.
Right.
And Medicaid doesn't cover you in an assisted living facility.
Mm-hmm.
So, it was, I'm not sure what they're going to do with her to help her out, but she needs help. And the only option she has is to move in with a relative.
Right. Which is very difficult.
Yeah, because I don't know what you do in that situation.
There's not a whole lot you can do, especially as a relative. It's going to be tough, but that's what a lot of us will do is bring them with us.
Yeah, well, the lesson too here is like when you're raising your children, make sure you are really kind to them.
Right? And talking to them. I always say, my son's 15. We haven't had conversations, yet about things like that. But I try to talk to him about just general financial. A lot of kids, and myself too, growing up, don't get that from our parents. And so it's hard to have that conversation later on in life when you really never talked about finances before. So I want to have
Oh yeah, that's important to teach
ready.
your kids about money. Nobody
Mm-hmm.
ever taught me either.
Right. And so how do we have a conversation about long-term care, which is just a very touchy subject, when we can't even talk about, our finances with our parents?
And that conversation about long-term care also has that conversation as I'm going to die at some
Right.
point in my life.
Right.
And that's a difficult conversation.
It is. It really is. And I'm very understanding, when I talk to people as well, because it's not just, oh, hey, you should do this, and it's great. It's like, I know it's difficult. I know it's hard. But if you do it, you'll feel better. You will feel better when it's over, and everybody is on the same page.
I think to sum up this whole show today, it's really about communicating your wishes to your family members about what happens if you're going to be in a long-term care situation. And I hate to use the word long-term care situation when you're not healthy
When you're
and
not
you need
healthy,
assistance.
and you have a chronic illness.
Yes.
You have a chronic illness, and you're going to need help. Who's going to help you?
And none of us want to be a burden on our children, or it doesn't even if you never had children or a relative, like anybody. And there are people who never had children or maybe were never married, and they're coming out and like, who's going to take care of me?
Right.
And those are the people that I like to talk to the most about long-term care, because who is going to take care of you?
And where will you go?
And where
Do
will
you
you
want
go?
choices?
Yes.
Yep.
Wow. Thank you so much for coming and sharing your information with us.
You're welcome. Happy to be here.
And if anybody would like to continue that long-term care conversation with me, just give me a call. This has been Unstoppable, where we dream, grow, and thrive.
Thanks for watching Unstoppable. Do you have a question for Paula? Send it our way. To schedule a one-on-one consultation, give us a call. Unstoppable is brought to you by Paula Swain and the Financial Center for Women. Dream, grow, thrive.